Those are all the top headlines that we are tracking from the world of mid caps. But first up, let's take a look at what the market is doing. And we have seen a solid recovery from opening lows. Nifty is just about flat as we speak. It is trading at 22,947 as we speak. Nifty Bank 2 has recovered from the lowest point of the day, 52,235 thereabouts. Of course, it is still sitting with a cut of 0.7%, but it has recovered from opening lows. Several individual stocks and sectors are in focus, and we'll discuss those during the course of the show. But first up, let's get a management. We have the management of Vikran Engineering. The CMD of the company, Mr. Rakesh Markhedkar, is now joining us. Mr. Markhedkar, thank you so much for taking your time out and joining us here on ET Now. And first, I have to start by congratulating you and asking you about the two LOAs that you have received worth about 530 crores. This is from Maharashtra State Electricity Distribution Company. If you can take us through how significant are these order wins for you as a company?
Yeah, good morning, Snehi. And first of all, thank you very much for inviting us. So, as you mentioned, it is the very high start of this financial year. You have given a strong opening by taking two orders of put together 530 crores. This and This is comprising of two zones of Maharashtra state, that is namely Nashik and Kolhapur zone. So Nashik zone order is 235 crores and Kolhapur is around 296 crores. These orders are for strengthening of the power distribution network, comprising of the substation, new substation of 33 kV by 11 kV, 22 kV by 11 kV, and 22 by 11 kV, new substation transmission lines, and re-strengthening underground cabling. It's a very good order funded by the Asian Development Bank. So this is a very strong validation to our core the strategy what we have planned for this financial year, and this makes the total order book more than 5,000 plus crores. If you see for the last 4 months, the company has acquired more than 3,000 crores projects. So this is the very high time, and this is the first time we are sitting with a very high that order book. And the same way, we are also giving the complete momentum for the execution of the projects, with the team strengthening and continually project commissioning is in place. So we are there as per our that strategy and what business outlook we have given for FY27. So we are on the track on this.
Right, so 5,000 crore order book, that is the order book that you're currently sitting on. Mr. Markhedkar, also wanted your thoughts on the execution timeline. If you can take us through how and when will this order book translate into revenue and profitability for the company? What will the timeline be?
So this current unexecuted order book, 5,000 crore plus we have, that is to be executed between 15th to 18th month, except this new order. This new order is for execution period of 21 months. So that as far as the revenue projection is concerned, we are maintaining for the last 3 years around CAGR of 30 to 35%. And we will be able to maintain for that. But FY27 will be the very high growth. So we expect to be there around 2,200 to 2,500 crore revenue in this FY27 for sure, because this order has to be executed in this given time. So this is what, as far as the revenue projections are concerned.
Mr. Markhedkar, if I'm getting you correct, you are raising your FY27 guidance, right? Because last time when we spoke to you, you did tell us that you're looking at 2,000 crore revenue for FY27. And now you're guiding for 2,200 to 2,500 crores. That's a significant uptick.
It is because of this order book. It has to be executed in 12 to 15 and 18 months time. So we have to be there, and all momentum is set. So FY27 will be the turnaround year. And turnaround means that is going to the next orbit. So this is never happened with the Vikran. So that good growth we will be giving in that FY27. We have very strong reasons for that. We have the funds with us after this IPO. We have the order book. We have team strengthening in place. So all the positive moments are there now. And another good moment is there that on the realization of the revenues, like the Jal Jeevan mission that debtors we have started realizing. And I'm very happy to share in just few days, we could able to get more than 20 crore collected from Jal Jeevan Mission. So it's all very positive happening now in the business and in the company.
Right. So revenue visibility clearly is very strong, not only for the first half of FY27, but you're very confident for the full year. But
Sure.
Mr. Markhetkar, also wanted your thoughts on the margin front, because I believe in the last quarter margins were a bit of a concern on account of execution timelines. If you can take us through, where do you expect margins going forward from the 13 to 14% that you reported over the last 2 to 3 quarters? Do you expect them to inch higher going forward?
If you see the last 3 years track record, we are maintaining average 15% EBITDA margin of this company, and we'll continue to maintain that FY26, and we have very clear visibility for the FY27 as well, because we are not compromising with the high margins of the projects, and that we are maintaining very strong discipline in project selection and the high margin projects and the execution. So we will be maintaining that EBITDA margin, what it being projected time to time.
Right. So margins, you're very confident on that front as well. But also wanted your thoughts on international expansion, because I was reading your presentation of third quarter, and you did tell us that you're actively evaluating opportunities in select international markets. What has been the progress on that front? And as a result of international expansion, will your order book and your revenue visibility grow further?
See, we all set to go with the registrations and the booking for the quoting of the projects. But since the 6 weeks from last 6 weeks, because of the uncertainties in the Middle East markets, though we got the inquiries, but we are not replied to that. So we are going very cautiously for the Middle East. Whereas for the African market, we have started quoting in a big way, in a good way. So we are looking for the country like Kenya and other African countries where we are quoting both power T&D and solar projects. But as far as the Middle East is concerned, we are just waiting and watching the situation, and we are not in hurry to move in that market immediately.
That's as far as the international expansion plans are concerned, but 80% of your order book now comes from power, T&D and solar segment, and this has significantly risen from just about 60% a year back. What will the revenue mix look like? And also wanted your thoughts on profitability. Is profitability for power, T&D and solar higher as compared to other segments of your business?
Yes. See, if you see that FY27 guidelines, what it comes, approximately 60% will come from the solar, 30% will come, 30 to 32% come from power T&D, and 8 to 10% from come from water. As far as the margins are concerned, we have the mixed basket, and then we are very sure some of the projects are with the good, very high margins, like solar projects. Currently, what we are executing is slightly better margin as compared to power T&D, but overall EBIT margin will be 15 plus.
15% EBITDA margin guidance, growth plans continue to remain intact and across the board.
Sure.
Clearly, the
Yes.
outlook for FY27 is also very positive. Mr.
Right,
Marketkar,
right.
thank you so much for taking your time out and joining us
Thank
here
you
on
very
ET
much.
Now and
Thank you
sharing your
very
thoughts
much.
on what the outlook for the company looks like. But on that note, we need to slip into a very short break. More news and updates will continue on the other side.